The Reserve Bank of India on August 10th kept the repo rate unchanged at 6.5%. This is the third time in a row that the central bank has kept the key interest rates unchanged. The repo rate, the key rate at which the RBI lends to banks, was last increased in February 2023 by 0.25%.
The Monetary Policy Committee met on 8th, 9th and 10th of August. After detailed deliberation on all relevant aspects, the Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth.
Analysts had earlier anticipated that the central bank will likely maintain the current pause on the repo rate. This stance is motivated by concerns over inflation and the necessity to sustain a stable borrowing cost. The last 2 bi-monthly policy reviews were held in April and June. The governor also mentioned the growing inflationary concern arising out of vegetable prices led by tomatoes and uncertain monsoon as prime concerns behind status quo on interest rates.
Headline inflation, after reaching a low of 4.3% in May 2023, rose in June and is expected to surge during July-August, led by vegetable prices. While the vegetable price shock may reverse quickly, possible El Nino weather conditions along with global food prices need to be watched closely against the backdrop of a skewed southwest monsoon so far. These developments warrant a heightened vigil on the evolving inflation trajectory. The cumulative rate hike of 250 basis points undertaken by the MPC so far is working its way into the economy.
So, what does that mean for us? Well, it's likely that the rates of ongoing EMIs on your home loans, auto loans, business and personal loans will likely remain same as they have been for the last 6 months. There is also a possibility that in certain cases they might also go up. As far as prices of vegetables and other food items are concerned, it shall still take some weeks for them to cool down. In fact, a lot depends on monsoon season, Kharif sowing output and supply problems existing in the market. On its part of controlling inflation, the RBI has been firm on maintaining high interest rates for some time and keeping a policy of wait and watch. So, is this the right time for you to take a loan? Well, we can't answer that question for you. But what we can say is that interest rates are likely to be high till October. Festive season is probably the time when it is expected that the central bank might cut interest rates to encourage spending. Until then, let's hold our purses. Stay tuned to Live Mint for more such updates. And please let us know what you think in the comment section.
How can I achieve my targets? How can I target the remotest markets?
You only progress when you ask better questions. Mint. Think ahead, think growth.